Hawkins from Your Black World and the Black Business School, and I want to welcome you all to the platform today. Today we're going to talk about GameStop and GameStop and the ultimate heist. The other run up on the Capitol, siege in the Capitol. What do they call it? What do they call it when all those people went and attacked the Capitol? I guess that's what it is, right?
Yeah.
This is what the Capitol.
I don't even know the name for it.
Except Capitol, instead of spelling with a T-O-L, it's a T-A-L. So this Capitol siege with GameStop, among other stocks, has occurred largely due to a Reddit forum called Wall Street Bets. And we've been keeping you guys posted on what's going on with that. And so I want to talk a little bit about this with my friend Jeff Lightsy Jr., who's with the Black Boss channel. What's going on today, Jeff?
Hey, it's going pretty good, Dr. Boyce.
Good to see you, man. Good to see you. Okay, so the Black Boss channel, I know that you guys are bosses, and you talk about everything that's kind of happening in the worlds of business and sports and life and everything else. And this is almost like a sport. You and I talk about whether Brady can win another Super Bowl, and today it's almost like the same type of enthusiasm talking about what's going on with these stocks. What are you seeing right now?
So, Dr. Boyce, right now, what's happening in the stock market is unprecedented. As you know, being a finance guy, you know that what we're seeing right now in the age of the internet, it continues to show how it changes everything. Like the internet literally is changing what's happening on Wall Street. And these big firms, these big hedge funds, all these people, they don't know what to do. They're kind of losing their mind right now. And even the apps that these guys are trading on. So for those who don't know, I'm 25 years old and I have younger cousins, younger siblings who are also in their 20s, like early 20s, younger than me. I'm considered a dinosaur to some of these guys. And so how they get their information, they didn't go get a PhD in finance, as you know. They didn't go, study this stuff in school. They're learning from Twitter. They're learning from Reddit. They're learning from these YouTube and stuff like that. So like what's going on is, like you said, you saw the GameStop. Everybody is like loving what's happening in GameStop. We've literally seen GameStop go from almost like a penny stock to being worth nearly $400 a share. I don't know the exact number right now, but last I checked, it was over 380. It was hovering around 380. So we're talking about from $13 2 weeks ago to $380. It's insane. Now, you broke down how that took place with the shorts and all that stuff. We can dive into that if you want to, but essentially what happened was there was a big internet guy, and once again, it's all based on the internet. It was a big internet guy that said, I'm betting the shorts on GameStop, and I think it's going to drop, right? And well, the Reddit guys and the Wall Street buffs were like, man, hell no, we don't want GameStop to drop. So we're going to buy up all the GameStop shares and make it go up, therefore making all the hedge fund guys that bet the shorts that said it was going to go down, well, to make up some of their loss, they got to buy it, and so the stock just explodes. That's like the simplest version I can put it in. So what's happening now, and I'm sure, Doc, you can dive into it even more. Mm-hmm. What's happening now is that in the Wall Street buffs, which you guys don't know, there's nearly 3 million people in that Reddit. Right. So there's nearly 3 million. So it's not like it's like a couple little internet nerds. No, it's nearly 3 million people in that one Reddit thread. And it's several threads. But in that main one Reddit thread, there's nearly 3 million people. And so now they're trying to figure out what's the next GameStop. And so their first choice was AMC. So AMC, you could have bought AMC yesterday for like $5, and now it's hovering around 16. Right? Like AMC. This morning, they decided to jump on Nokia. Now, think about these names. We're talking about GameStop, AMC, which is the movie theaters. The pandemic kind of wiped that off. You got HBO Max, Hulu, Netflix, all these different streaming services. So nobody's going to the movie theater. So AMC, GameStop, and now Nokia. Doc, I don't know about you, but when's the last time anybody had a Nokia cell phone? Now, once again, I want to preferences. I am not giving financial advice. No, I am not. Let's just make that clear, because don't go out there and buy Nokia and it drops down and say, Jeff told you to buy Nokia. No, that is not what I'm doing. But what I am seeing is that folks are jumping in on this stuff because they want to be the next guy to hit the lotto, and like some of those folks did with GameStop. You saw guys buy GameStop at $5 a share and now can sell it at $300 or $400 a share, and they essentially became rich. And so now you got a lot of folks like people in my family. I'm not telling you what to do, but I'm telling you what people in my family have done. They bought $200, $300 of Nokia this morning at $5 a share, and now it's hovering around $7, and they continue to think that it will continue to go up. It is incredible. It's literally like watching playoff basketball. Like it's like watching the Super Bowl or something. It's insane on what's happening right now on the market.
Well, there's Nokia stock on the screen. You can see what it's done over the last 5 days, and I'm gonna try to share my screen properly. And I'm doing this little squeeze thing to make the screen bigger. But you can look and see that's what's done today. This is the last 5 days actually, right here. You see where Nokia was trading at $4.16. Now it's trading about $6 or $7. And if you look over the last 6 months, I mean, Nokia has not been a big money stock, and so basically. You're seeing, I mean, what really amounts to, a very deliberate form of market manipulation. That's pretty much what it is, right? GameStop is trading at $337 a share, and here's the thing, I'm not mad at it, completely. I don't care. I mean, as long as you know what it is, right? I've made money on both of them. I made money on Nokia and I made money on GameStop, but. The thing that I think about is like, I'd like to believe I know when to get in, when to get out. Right. And the whole idea is really monitoring your greed and dealing with your FOMO. You have a fear of missing out. So if you sell, if it goes up from 30 to 60 and you sell at 60 and then you watch it go up to 360, you're pissed. Right. You're like, damn it, I wish I'd held on to that. Yeah, but it could have went down from 60 down to 10. Right. Because the thing is, when a stock does crazy stuff like that, it's almost like Cinderella. Cinderella goes out and she has all this magic, and for that magical moment, she's not the maid anymore. She's very rich. She's living this high life, but you never know when midnight's going to strike and everything's going to turn into a pumpkin, right? And this stock, I would be stunned if GameStop does not turn into a pumpkin. I think this is going to end badly. This is basically a pump and dump, right? So if I'm a guy that's sitting on Reddit and I'm sitting in my mom's basement or something, right? And I realize I have all this power because I got millions of people that are going to buy a stock because I told them to do it. That's a lot of power to have. Yeah. And I can see a person getting drunk with power and saying, okay, everybody go buy this stock, right? Like your little economic army. Go charge, and they all go siege the Capitol, and they all do what you tell them. And then what happens, though, in a lot of these situations is the person who tells everybody to charge, they quietly back out, right? Before the heat gets too hot, and so he's slowly selling his stock. He's like, okay, we got the price up there. Now we're going to start selling, and we're going to leave the suckers holding the bag when midnight strikes and GameStop turns into a pumpkin. Because the thing about GameStop that's fascinating about this is that GameStop's actual value, if you look at what analysts had, who did the math and looked at the company's revenues and everything, predicted that the price should be, they were talking about numbers like $18 a share, $20 a share, right? And believe me, GameStop is going to eventually hit a price that's close to what it's really worth. And so a lot of people that are buying at 200, 300, and 400, hoping that it's going to keep going up, you're playing a real dangerous game of musical chairs. Or maybe it's not dangerous. Maybe you don't care about your money. Maybe it's, losing a few thousand to take a chance. It's fine. We all go to Vegas and stuff like that. That's fine. But this is not investing for sure, right? This is speculation. This is gambling. This is day trading, but it's not investing. So what else are you seeing, Jeff, in terms of what people are saying about it and how they're reacting to this?
So also what I'm seeing is that you got the guys that like what we'll call is like the younger generation, right? That is taking advantage of the instant ability to buy, share, trade, call, or whatever. Like instead of, like you said, instead of having to actually study these things, you might pop in a quick 5-minute YouTube video and now think you're Dr. Boyce Watkins, right? Like now think you have a PhD in finance, like because you've been told by people, by different guys on the internet, this is how I made my money. And they might very well, because like you said, the market is how the rich stay rich. And so now you got some of these people who are ambitious, right? Like the younger generation that's ambitious, that has the Robinhood app, that has like instant ability, that might have a couple of $100 from a stimulus check or a refund from college or whatever, like a couple grand that they're just sitting on, or $1,000 or whatever, and say, hey man, I see that this guy put his life savings into GameStop, because of what he saw on Reddit, and now he's a millionaire. Why can't that be me? And so now, like I said, everybody is trying to find that next one. I've seen Nokia, I've seen AMC. You see, obviously the GameStop one is the one that's caught the whole world by storm. Blackberry. There's a bunch of different ones. Like I literally have my young cousins that's like 22 years old sending me different stock and trade advice, and I'm like, man, like what is going on right now? So you want to be the one, like you want to get in because you see all these stories. You keep seeing people. I put $5,000 in the GameStop and now I'm worth 200,000, right? So like you want to get in on that. And so now what you're also seeing though is the pushback, because with every time something new comes along, you're going to get pushback, especially new from a younger generation. You're going to get pushback. When Facebook first hit the scene, you got pushback. When Twitter hit the scene, you got pushback. And so now you're seeing these companies, whether it's from Wall Street, the federal government, or whatever, giving pushback. You get, because I get on the subreddit, I got on it, and they're saying, I'm not allowed to make this trade. Robinhood, for a brief moment, at least in some parts of the country, were stopping trades to AMC. Robinhood and TD Ameritrade was stopping these trades because I think they're getting pressure from these big billionaire companies saying, hey, we can't let these kids ruin what's been done for over hundreds of years, right? Like we can't let these kids come in with their fancy apps, come through and stop what we've been doing and how we've been making money and hundreds of millions and billions of dollars for years. And that is what's starting to happen. And I wouldn't be surprised if it continues.
Yeah, and by the way, I'm speaking with Jeff Lightsy Jr. and we're talking about what's going on with GameStop and the Reddit app and the stock market in general. Make sure you hit the thumbs up button, hit the share button, hit the subscribe button. Also follow Jeff at JLightsy7. He's right there. Follow him on Twitter, Instagram. He's a smart guy. Little Stephen A. Smith's what I call him because he knows everything about sports. And also make sure you subscribe to financialjuneteenth.tv.com. So let me dig into what you were talking about. Here's the part of all this that I really enjoy. I happen to be a fan of democracy, but that doesn't mean I'm right about it. I just happen to like it. But the downside of democratization of anything, I think it was Plato or Socrates who hated democracy because he said democracy will let any idiot on the street have an opinion, right? And countries have been destroyed from democracy. Actually, I believe Socrates, it was either Plato or Socrates, the guy who said he didn't like democracy actually died because he was falsely accused of a crime, and they voted on whether he was guilty, and he lost the vote. So literally democracy killed him. And the reason I bring this up, though, is that I happen to, though, be a fan of democracy. I think the good outweighs the bad. And what you're seeing, in my view, is the democratization of the financial markets, which is I think a good thing, right? I think we should have more people invested because actually what that actually does is it saves America's capitalism to some extent, because you've got mechanisms through which millions of people can participate in all the wealth that's being accumulated by the fat cats, right? You're not going to have as much money as Jeff Bezos, but how many of you, give me a yes or no, how many of you will be happy if you made an extra $100,000 a year, right? That's enough to keep a lot of people happy. Even 50,000 extra a year would make a lot of people happy. And so in America's biggest problem is that because the fat cats have been able to really wiggle so much money out of the stock market, that's the main wealth driver, by the way, in America. They've been able to wiggle so much wealth, you've created this massive inequality. And inequality is what drives revolution. Inequality is what pisses people off. Inequality is what makes people storm the Capitol or storm the hedge fund manager or do what people were doing this summer where they were burning down businesses and whatever, because you're keeping everything to yourself. So another part of that related to the democracy piece that I really enjoy about this is I like the fact that they pretty much gave the middle finger to the billionaire hedge fund managers who are literally clocking $1 billion a year. I mean, some of these guys, go look up the salaries of the leading hedge fund managers. They're making over $1 billion a year. And so I love the idea that these guys got together on Reddit and said, we're going to go and do a run on your ass. We're going to take all your money. We're going to jack you for every penny you got and then make you have to close your short position at a massive loss. This hedge fund, I think it's called Melvin Capital, lost $6 billion because they eventually had to surrender. Because what happened was that they sold the stock in advance and they were going to have to buy it back later. That's how you make money on the short sale. You sell high and you buy low. And so they were because there was reason to expect that the price was going to drop. Yeah. So when Reddit stepped in and said, no, this price is not going to drop, we're going to make sure the price goes up. Well, now it's at 3 something. So you got to go back and buy back a stock for 3 something. Imagine buying something for $300 and selling it for 20. Like, that is not a formula to get rich. So I do actually like what's going on. I think it's really exciting to watch. I actually went to the forum. What other things did you see when you went to did you go to Wall Street Bets?
Yes, I went there. Yes.
So what did you see there in terms of just, what people are saying now that might be different from what they were saying in the beginning?
So they're saying exactly what you're saying, because now they believe that those same hedge fund managers are watching them. And they said, F you guys for watching us. We're going to keep this going. This isn't the end. This is just the beginning. And that's what makes it like kind of exciting and like scary all at the same time. Because it's like, what's going to happen next? There are going to be people that get rich off of this. There already has been, and there's going to be others. Now, I don't know. Once again, this is not financial advice. I don't know which stock is going to pop. I don't know which one's going to blow up and which one's going to go to the bottom, which one's going to be the pumpkin and which one's going to be Cinderella. Like, I don't know. I'm in there guessing just like you, but the one I consistently see is the Nokia. That's all I can say. I consistently see the Nokia, and it's currently trading at the lowest price. I think at around less than $7. So like, that is what's being said. And that's why it's so interesting, because you're going to continue. You're literally watching these things, especially if you buy into it. You're literally watching it, whether you put $100 or $20 or $200, you're watching it go from $5 to $5.50 to $6 to back down to $5.75, back up, and it's like a playoff game. It's like every minute you're watching it, don't knowing what your money's gonna do, because you're like, dang, was I an idiot for buying in? Oh my God, I'm so stupid. Oh my God, hold on, I'm rich. I made $5. I'm rich. So you don't know what's gonna happen, and that's why it's so funny, because the 20-somethings, the younger generation they're not. Me, I did play with it. I dropped $40 or $50 just to see. I was like, man, I got a few extra dollars or whatever. But you got guys that don't have a pot to pee in that's dropping $200, their last $200. So instead of they might get rich, or they might not be able to eat for the next 2 weeks, right? So their next check clears, right? Like, so that's what's kind of taking place, and that's why it's so like incredible. Like, because you're literally gambling, hoping that other people have the same mindset that you have, and they can or may not. So that's why it's so crazy to watch.
Well, first of all, I want to tell everybody, remind you that I'm talking to Jeff Lightsy Jr. From the Black Boss Channel. Make sure you subscribe to the blackbosschannel.com, and also hit the thumbs up button, share, subscribe button if you haven't done it yet. And also, if you want to know more about investing, you want to get free stuff from the Black Business School, you can go to firstsharestock.com. Just know I don't teach in a roll the dice kind of way. We talk about stock market investing in a way where I want you to get rich slowly. And if you happen to get rich quickly, then that's good for you too. I hope that happens for you. But feel free to go to firstsharestock.com. If any of this confuses you, don't worry. We got you. We can explain how all these fundamentals work, so you can just see what's going on and make the best decision for yourself. Let me lay out a quick thought for you, Jeff, in terms of what I think is going to occur. And I had to make a couple notes, because I want to make sure I say this in a way that makes sense. So first of all, I was right in the mix of it. I made money from GameStop, and then I made some money from Nokia. I do not have a position in Nokia. I do have a position in GameStop that involved buying the stock at 113, selling some call options that immediately went past the strike price. So I made money from the options, and I made money from the stock. And then also I bought some put options to protect my position from the bottom, in case the stock collapses. When Cinderella turns into a pumpkin, that's what your put options are, your insurance, right? So I made a pretty penny with that. My woman is giving me kisses because I did good with that. But here's the thing. When you talk about what's going on right now, the reason Robinhood is going to react to this is because they're probably afraid of liability. Because the funny thing about taking risk is that when everybody is excited and financially drunk, everybody wants to do what they want to do. Like, don't tell me what to do. I'm free to do what I want, blah, blah, blah. But then when something goes wrong, those same people who were happy to have all this freedom will be like, well, why would you give me all that freedom? You know that I'm stupid. You know I don't know what I'm doing. Like, why would you even do that? Right? It reminds me of this guy. There was a really wealthy man who got drunk in a casino, and he kept asking for extra chips and extra credit. And let's say he's worth 40 million. He literally spent 20 million at the casino, and he sued them later and was like, you shouldn't have let me gamble when I was drunk. Right. I think that's BS. But then again, that's my opinion. I believe you take responsibility for the dumb stuff you do. Like if I get drunk and go kill somebody, I'm gonna go to jail. I can't say, well, I was drunk, I didn't know what I was doing. No, I'm gonna still get punished, right? But the thing is, in the financial world, in our society, it doesn't work that way. People are allowed to pass the buck when things go wrong. So now, what I noticed with Robinhood is they actually have a label, a day trader label that you can get. Where then, once you get labeled as a day trader, you have to have at least $25,000 in your account when you make your next day trade. And so I think the way they do it is if you do 4 day trades in a row in the same week, meaning like if 4 times in the same week you buy a stock and sell it on the same day, you get labeled as a day trader. And so somebody says that's not a new rule. Okay, I didn't know. I've never seen that before. And I bought and sold stocks on the same day on many occasions. But basically, they put up a little warning that says, if you do this again, you're going to be labeled as a day trader. And if you do, then you're going to have a certain amount of money in your account. I believe it was $25,000 you have to have in your account. So that's one way that Robinhood, I think, is protecting themselves from liability. Because remember, there was that one kid in Illinois who had gotten deep into the options and owed a bunch of money, or he thought he did, and he ended up killing himself. So I think that's something that. So what do you think? I mean, how do you balance that between freedom and safety? I mean, what do you think?
Well, I think as far as what you're saying makes a lot of sense. Like you definitely want to protect yourself, but also I would say, Doc, you can correct me if I'm wrong, but Robinhood is capitalizing on people who may have never known anything about stocks or may still don't know about stocks. I think you call them uninformed investors, right? Like the uninformed investors. And those are the people that are making this company is what it is. Like the reason Robinhood is, I don't know what its value is, but the reason why it is as valued as high as it is because of what you would label uninformed investors. So you don't want to run off your base, right? Like that is your base. Like most people under 25K is the base on Robinhood. Like maybe not under 25K, but under 25K in an investing account. Right. So those are the people that are majority, because I can guarantee you all the people that I talk to are under 25K on the Robinhood account. I can almost guarantee you that. So that's what I'm saying. So that's why you definitely want to be able to protect yourself, but you don't want to put the clamps too hard, especially not on something like this, where you see a wave and you see an influx of money, an influx of dollars, an influx of investments coming into your app. Like a lot of people are probably using a TD Ameritrade and all the different kind of other social media apps, but the Robinhood is the popular one on Twitter. Robinhood is the popular one on Instagram. Robinhood is the popular one on social media, and they're capitalizing on that, right? They're capitalizing on a younger generation. They're capitalizing on those uninformed investors that are trying to become more informed or trying to become a shark, right? Like they want to be a shark. They're not there yet, and they probably never be there, but they want to be there. In their mind, they're Dave Ramsey, they're Dr. Boyce, they're like these big time like investors. I know what to do with my money, when to do it. And they see other folks get rich. And so they think other folks around their age. It's not just other folks in their 40s or 50s. They see 20-year-olds become hundreds of thousandaires, right? Like worth 100,000, 200,000. They see it, early 30-year-olds. And so you want to be like that. You want to get to that place. So that's why I'm saying I know Robinhood wants a certain level of protection, but they can't come down too hard, because then that takes away the fun of being an investor on something like Robinhood.
That's true. I can definitely see that. I mean, if you look here, you can see that Robinhood, according to Business Insider, Robinhood has a valuation when they go public, which should happen early this year. Their valuation is expected to be about $20 billion. So you're talking about a lot of money being passed around. And speaking on that, one thing that's also happening here is and this is why so the next step of that regulation is not just going to be from Robinhood. It's going to come from the government, right? The federal and state government.
Absolutely.
Now some of that can be justified, some of it can't be, but we do have a history of protecting investors, the best that we can, but then sometimes you can overregulate. But let me tell you where some of the regulation is going to come from. Some of the regulation is going to come from the fact that when there's this much chaos and this much of a frenzy, the shark eat the fish. The smart investors are able to figure it out. I'm going to tell you like this. When these hedge fund managers and their staff are all studying these little Reddit forums now, they're going to study them like rats in a lab. They're going to use that to find a way to make money. They're going to be like, okay, yeah, sure, dude. They're going to be studying like the FBI studies rappers. You know how many rappers go to jail because they don't kill somebody and rapped about it, or they got weapons and weed in the studio while they rapping. Like it's easy. It's easy pickings. It's easy. Like you literally incarcerate yourself. So the fact that these forums are out there and they're public, they're going to be spied on by the people that are trying to make money, because on Wall Street, the religion is money. That's all they're not so pissed off that they got played that they're not going to think, okay, we got played once. Now, how do we go back and become the player? Right. So that's what is going to happen. And so that's where the regulators step in, because what the regulators are going to realize, or they're going to look at, is the fact that companies are going to take advantage of this. Even Elon Musk, who's cheering it on and everything, when he saw that Tesla stock was going too high, he flat out told the public the price, my company ain't worth this much. Like, what are y'all doing? And but since people insisted on pushing the price up, he's like, okay, cool, we'll go sell more stock. That's what you do when something's overpriced, you sell, right? So he literally filed paperwork to say, we're going to keep issuing Tesla stock, because apparently the public doesn't care what we're really worth. They're just going to pay for it based on the cool factor or whatever. And also what's going to happen is regulators are going to step in, because somebody is going to walk away from this hurt and mad and upset. Like, somebody's going to lose everything. And then those stories are going to be used to justify whatever new law they're going to come up with, which ultimately, though, which is unfortunate, because you have a pretty oppressive society, it's going to be designed to keep the little guy out. They're not going to let it kind of continue like this forever. It causes too many long-term problems that we're not used to yet, that at some point they're going to regulate this. They're not going to let people just roll on Reddit and decide they're going to move a stock price. And also I wouldn't be surprised if at some point somebody gets accused of like a pump and dump type of thing. The problem that they have is that they can't prove that what you're saying is untrue. You're not deliberately spreading false information, but they can just wiggle that law a little bit and say, hey, yo, if you get on your social media and you tell a bunch of people to buy stock and you don't have valid, informed analysis that you can use to justify that, then, and the stock gets pumped up, especially if we find out you sold after you pumped it up, we're going to get your ass. Like, I think that's where they're going to go with it.
What I will say to that is, as far as the Reddit goes, there really isn't, from what I've understood. Now, somebody can correct me in the chat if I'm wrong. There isn't really one voice. It's like one opinion, and then several people kind of jump in on it, right? So it's like, hey, we love our GameStop because that's where our childhood lies. Like, let's all go drop $100 in the GameStop, or some was dropping way more than $100, obviously, and that's when it jumped through the roof. It was really one voice that was saying that was trying to sell the shorts. I can't think of the man's name. I think his that really started this whole thing. He was the one that was saying, sell GameStop. It's gonna go below, and they try to prevent him and his company from actually getting paid. It was like, oh, hell no. Like, no, you're not going to take away our childhood and make a whole bunch of money, because our favorite thing as a kid growing up is going under. So that's how we're going to make our money, because he was getting his base and his company to sell the short and, get the shorts off if it fell. And that's why when it blew up, him and the guys in his company, because he has a bunch of followers, had to buy it back at the $300 price, and it would continue to make it go up. So that's what their initial plan was. And so because of the users inside the room saw that, now they're trying to create, because there are other shorts. The Nokia was a short that people were trying to capitalize off of. The AMC was a short people were trying to capitalize off of. Ford, there was different ones. Like, there were different ones. And so they were like, okay, here's the other ones that were projected not only in his, but in other investment companies that were going to short, that they expected to go down. This is how we're in. They're very cheap. This is how we can make this the next GameStop. This is how we can make Nokia the next GameStop, or AMC the next GameStop, or Ford Motor Company, or whatever. Like, that's how they're choosing. Or Blackberry. You know what I mean? Like Blackberry ain't had a phone in at least 15 years, right? Like, so we're going to choose Blackberry, which was trading at $2 a stock a week ago. Now it's up over 20, right? Like, it's just like, this is how they're doing it. And because they have a reach of over 2 million, nearly $3 million companies, and $3 million followers. And then you have guys that there isn't a follower per se, but you can go look at it, right, for free. And you don't have to technically join. So there's probably double that amount that's actually looking at it. And they're choosing these companies because they're priced very cheap and can get it, and are trying to become super rich off of it. Man, that's what's so crazy about it. But like you said, some sort of regulation is going to happen because somebody is going to get pissed off or somebody's going to join too late and get really hurt. Because a lot of these guys, if you're reading it now, we can't believe everything we see on the internet. But if you're reading it, they're dropping 10, 20, $50,000 into these $5 share stocks. Like, think about it. Think how many shares you get for dropping 50 grand, 20 grand, 100 grand. Like, they're dropping literally their life savings into these things, hoping that they can get rich by this time next week or in a few hours. You know what I mean? Like, it's just crazy.
Well, I'll tell you what, it's going to be interesting to see how it goes. And I hope everybody who's participating does not lose your shirt. Just be careful. Keep your eye on the market. If you jump in, if I was involved with any of these stocks, I'd be watching them like a hawk. Just to see, I was checking them on my phone as you were talking, and I can't condemn anybody that's participating. I mean, I participated, but the thing is, you have insight also that comes from, when you've seen how bad things can really get. Like I get, like, if you never really lost like 90% of your money before or whatever, then you may not know. And so I would just tell everybody, be careful. But this is interesting. There used to be a belief, actually. I remember back when I was in grad school, when we would talk about like small investors like this and what impact they could have on the market. And there used to be a belief that they didn't have enough money to move the whole market. And that's actually still true. They I don't think they have the amount of resources to move the whole stock market. But what has happened is that they've just selected individual companies to deal with, to go after, and they're basing it on the amount of short interest in that company. So if there are lots of short sales being made on that one particular stock, then they'll say, okay, let's go get that one stock. Let's siege that one building or that one, that one city. We're not trying to take the whole country. We just want that one city. So I'll keep posting on it. I'm gonna keep everybody informed on what's going on, and I hope you all are making trillions and trillions of dollars. And God bless you if you have made money from this. I know a lot of you are active investors, and I think that's really smart of you because that is where the money is. And so thank you very much, also, Jeff. I appreciate you hanging out, man. Thank you.
It's no problem. Thanks, Dr. Boyce, for doing this. It's fun.
All right.
I'm going to watch. I'm going to keep watching. I can't wait to see what happens next.
Yeah, no, right. This is crazy. So, Jeff, everybody follow Jeff at Lightsy that's his information right there. He's on Instagram, Twitter, everything else. And also make sure you subscribe. If you haven't subscribe to the channel, go to the blackbosschannel.com. That's where Jeff does his thing. And that's our channel for black men. So if you want to hear what black men have to say, you can go to that channel. And also, in case you didn't know about our financial workbooks or flashcards for kids, feel free to go to financialworkbooks.com. You can take a look. We have some really good workbooks and flashcards so you can teach your kids about investing so that when the sharks do arrive, they won't get eaten like the fish. You at least want your child to be a shark. So be prepared. All right. Take care. God bless everybody and have a good day. And thanks a lot, Jeff. See you soon, man. All right. Peace.